If you have served your country, you deserve to understand all of the benefits that are available for you when purchasing a home, not just being sold a property. So in today's conversation, I am going to break down how your VA loan actually works, what are the benefits of using it, some of the common myths that you should definitely be aware of, and some of the mistakes that are definitely going to cost you money. And to address the pink elephant in the room, yes, I'm a real estate advisor. Yes, I have my team here in El Paso. And yes, my family is military background, and I would actually benefit from somebody purchasing a home with me. But I want to make something very clear, because I see a ton of realtors that just genuinely don't take care of their clients. And because of those realtors, there's a stigma that happens in the industry that all realtors are bad. And that's not necessarily true. Just like I could sit here and say that there are some really bad doctors out there that are taking advantage of people, but I could also sit here and say there's some really great doctors out there that genuinely want to service people. There's some really bad attorneys out there that are taking advantage of people. Meanwhile, there's some really great attorneys out there that are taking care of their clients. I want to preface that because I believe that when you take care of people, God will always bless you with more than enough. So I don't have a need to push somebody to buy something that they don't need. Yes, I am going to give you all the advice so that you can make an informed decision. But whether you decide to purchase with me or not, this is information for you to utilize it and not be taken advantage of. So now that I addressed that, let's get into the video. VA loan is one of the most beneficial loans out there, especially if you have served. Not only is it going to allow you to not have a down payment up front, it's going to help you with no PMI, it's going to help you with competitive interest rates, flexible credit guidelines, and multi-unit property potential that you can purchase. But before I do that, I want to address a common myth that a lot of people actually believe when it comes to their VA, which is you don't have a down payment. Although that is partially true, you don't have to pay for the down payment up front. You do actually get it rolled into your loan amount. So if you're buying a house for $300,000, your down payment comes out to $10,000, you're going to finance $310,000. I want to make that very clear. I've seen a lot of realtors that say you don't have to actually pay anything at all ever. It's money that is free. That is a red flag, so make sure that you are aware of that. But I will get into what the VA funding fee is, and again, how to actually understand if you qualify. And I will be inserting up here how to actually know if you're eligible for your VA loan. I will say though, you actually can bypass this step completely and have one of our lenders help you, but you don't have to. You can go into the va.gov, and under the section of buying a home with the VA backed loan, you can actually see that there's going to be a contact number that you can reach out to, or you can either find out if you qualify for your COE or apply for your COE. So with that, that's going to be your certificate of eligibility that actually lets you know if you actually qualify to utilize the VA loan. Now, there's also a full list of how to determine if you actually qualify for the VA loan. So I will also insert this here for you, but it basically says minimum active duty service requirements. So it talks about if you have served for the last 90 continuous days all at once without a break, you meet the minimum active duty service. So if you just enrolled, if you just got enlisted, that again, as long as you're 90 days in, you will be able to actually utilize your VA loan. The next one is also for veterans. So the minimum active duty service requirement depends on when you actually served, and they will give you an entire chart here so that you can actually look at it and see, okay, when exactly did I serve? It starts from like 1990, 1980s, it goes all the way to 1940s. Now, also for National Guard members, you meet the minimum active duty service requirement if you served for at least 90 days of non-training active duty, Title 10 service, or at least 90 days of active duty, including at least 90 consecutive days. So again, this is why I always mention that it makes it easier if you just connect directly with a lender that can actually help you. We can actually help you get your COE. We can help you get everything verified. And we do specialize with VA loans, meaning that we do a lot of VA loans, so we know what we're talking about. But if you rather just go through the website and actually see what are the parameters of your qualification in terms of what I just mentioned, that is something that you are able to do on your own. As far as benefits go, you don't have a PMI, which is your premium mortgage insurance, and that will actually save you money on the monthly expenses that you have. So think of the PMI as a insurance that the bank is putting on you that you have to pay for in case you default. But the downside of that is that you would actually think, well, that's good. If I default, if, God forbid I pass away, my family doesn't have to worry about it. That is incorrect. Who will have the flexibility to not worry about anything is the bank. So because of the fact that it's a PMI, you are paying for it, it's basically protecting the bank in case you actually default on your loan. So it actually costs you more money and it's not necessarily a benefit for you. So when you have a VA loan, this is a really cool thing because now you actually get to take advantage of that PMI not being applicable, which is going to save you on the monthly payment that you have toward your home. Now, another major benefit of the VA loan is that because it's actually backed from the government, you will have more benefits. So it's going to actually be guaranteed up to 25% of the loan from the government. The lender is going to see you as a lower risk and they're going to give you stronger rates. Now, this is typically speaking because what I have seen in the industry, and I won't say names, but there's this very famous company out there that starts with veterans, and essentially they will promote that they have the best rates, and that is not necessarily true. Okay, I have been part of their referral network and I've just seen that they're not necessarily delivering on what they're promising. So I decided to actually do away with that and just become my very own specialist and have actual lenders that care about my clients that are giving you guys the best rates. But I've seen it time and time again where overall, when you go with a lender that is getting a lot of volume and they don't have an incentive to really keep your business, they're just going to see you as another number. So I will say that this is where comparing lenders really matters. And if you've seen any of my videos, I talk about this all the time. You want to be interviewing agents and you want to be interviewing lenders. Why an agent? Well, because not all of us are the same. Maybe you don't like my vibe. Maybe you don't like the way that I speak. Maybe you don't like the way that I talk fast. Maybe you actually do. Maybe you love the fact that I'm authentic and that I'm being real with you. And maybe there is somebody else out there that is trying to sell you on something that isn't really in your best interest. Same thing goes with lenders. The difference with a lender, though, is that a lender is going to tell you, this is what I can give you in terms of your rate. And at the end of the day, if they feel like there's no other competition, they're going to give you their bottom line without really working with you, without really negotiating with you, which can actually end up costing you more money. So for me, all of my lenders know that they are up against other lenders, and if they want to keep the deal with them, they need to make sure that they're putting their best foot forward. So this is why I always tell my clients, make sure that we interview with at least 3 lenders. You don't have to, but it is definitely something that I always encourage. With the VA loan, it is going to be for primary use. So that means that you can purchase it for yourself and you have to live in there, but you also could use it as house hacking, as I like to call it. And what you do is that you can actually buy a quadruplex and live in one of the units. You can buy a duplex and live in one of the units. Now, basically, you just purchase your first house, you also purchase an investment property, and when you decide to deploy, now you can just rent those out. Well, you don't decide to deploy, right? But when they pull your orders and everything gets changed, then you can just go ahead and actually set it up as a rental property. Again, this is why I always tell my clients, it really depends on what your long-term goal is going to be. I have some clients that know for sure that they're going to be here a little bit longer. Some of them, they're like, even if I don't and my orders get pulled and I get, relocated somewhere else, I still love El Paso and I want to have property here. So again, this is where a strategy session really comes into play. And if you're new to the channel, all of my links are listed down below. I do have a buyer consultation where I can walk you through everything from relocating, from the areas that you want to be in, from what are the common pitfalls that you should be looking out for, in case you don't want to go through every single one of my videos, because I've talked a lot about all these things. But go ahead and click down below. So definitely make sure that you're just putting together a strategy so that you don't end up buying a house that when you have to sell, now you're having to pay to sell, because that is definitely something that I always recommend my clients be aware of, because it can happen. Now, I will say this, getting pre-approved before starting to look for homes is one of the most important things that you can do. And I know that when you are working with a rookie agent, a lot of them are okay showing you houses without actually getting your pre-approval ready. And I'm just going to say it, it's a disservice to you. Why? Because it's the equivalent to me taking you out to eat, and then at the end of the day, finding out that I only have $20 in my bank account and that I actually can't pay for your meal. It's the same exact thing that would happen if you want to purchase this house at $300,000, but your pre-approval is for $280, or vice versa. Maybe you wanted something that was a lot more fancy, a lot more done, more upgrades and finishes, and you settled for something for $300,000. Meanwhile, what you really wanted was this gated community for $500,000, $600,000, but that it was going to actually give you the lifestyle that you want. And this is why I always tell my clients, yes, make sure that you look at your numbers. And I know some of you guys are super smart and you already know how to run your debt to income, and you already know, like, I have great income, I have great credit, I know my debts. And if that's the case, like, that's a very different situation. But for the most part, a lot of my clients, they're like, I know that I get good money, but I have a lot of bills, so I want to make sure that my debt to income is going to match. I did also make a full video explaining how the DTI works, debt to income. So if that's something you haven't seen, go and check it out after this video. But it is something that you want to make sure you know, because again, the last thing you want is to be actually in love with something that you really want to make an offer on, but you're not ready. Now, I will say, and this is like something that you want to keep in mind, depending on when you're looking to purchase the home, you want to make sure that they do a soft pull on your credit. Because if you do a hard pull and you wait, let's say 6 months, the credit that they ran is only going to be good for 3 months. So they're going to have to pull it again. I will say though, and I'll use myself as an example, I'm actually in the process of buying another property, and they pulled my credit at the beginning of the year. And there's been like 3 houses that like I really liked, but we went back and forth in negotiations. And because I know what I'm looking for, I was just like, no, it's either this or I'm not taking the deal. So I didn't take the deal, and I've had to get my credit pulled again. It takes like 4 points off. And as long as my credit, I continue to pay my credit, as long as I continue to watch my credit inquiries that I'm having, it's not a big deal. So just keep that in mind, because some people make it this big deal and believe that it's going to really hurt your credit, which in reality it's not. I used to have a credit repair company, so I've seen it. So just keep this in mind, because again, if you rather just wait, that's definitely an option, as long as you know your numbers. If you don't wait, because in the time that you could have already started working on your credit to get to a qualifying position, then by the time that you actually want to buy a home, you figure out that you're not ready, and it's just going to take you more time to get to a point where you're ready. Now, I'm going to give you an example of why it's important for you to actually compare lenders. So I'm going to start here giving you a quick example. So let's just use the example of $300,000, and you are on a 30-year fixed mortgage. Now, with example A, let's say we got you a 6.25 rate, and for your principal and interest, let's say your monthly payment was going to be $1,847. And on example B, let's say your rate was a 5.5. So for your P&I, let's say it was $1,703. Well, that's already about $100 difference there. So what we want to keep in mind is that this is 2 things. This is just your principal and interest. You still need to calculate your taxes and your insurance. Every area is going to have a different tax bracket, meaning the overall amount that they're taxing you at. One area can be a 2.4, another area can be a 2.8, another area can be a 1.9. So what ends up happening is that if you don't know your numbers, and if you're not comparing lenders, and you're not actively being aware of the area, you can end up actually buying a house in an area that is going to cost you a lot more money simply because of the taxes. So although you're using your VA loan, make sure that this is something you're aware of, because again, it could affect you and it will affect your final numbers. So always keep that in mind, especially when you're buying a house for the first time. And I do want to say $144 might not seem like a lot, but over the 30-year term, that is like $50,000 that you just gave the bank for free because you didn't shop lenders. So this is the importance of making sure that you're shopping the rate to make sure that you're actually locking in with a lender that truly has your best interest in mind. I do want to say, when you're using your VA loan, there's a couple of things that you also want to keep in mind. I talked about the qualification requirements. I talked about the down payment. I talked about, making sure that you're shopping your lenders. So let's just say you did all of that and now you found the perfect home and you found the realtor that's going to help you and you found the lender that's going to help you. What do you expect after? Well, you're going to have to make an offer, okay, which your realtor will walk you through all of that. You're going to actually also make sure that your realtor is putting a contingency so that you have an option period, which is basically when you're able to inspect the property, make sure that everything is fully safe, fully secure, and that you feel comfortable moving forward. Now, in this period, you are going to need a mandatory termite inspection. The regular inspection, which is when the inspector goes out, inspects the property, sees if, the roof is good, if the faucets are good, if the sewer system is good, if the HVAC is good. That's a regular inspection. That is what we call an inspection. Now, there is a difference between a termite inspection, which I just mentioned, and then there's also the appraisal. I get a lot of questions around this. A lot of people ask me, what's the difference between the appraisal? What's the difference between the termite inspection? What's the difference between the regular inspection? So to make it simple, an inspection, just think of it as an inspector going out, like I said, inspecting everything around the house. The appraisal is actually sent by the bank. So the bank is going to send out an appraiser to ensure that the property is safe for you to live in. But most importantly, what they care about is that the money they're going to loan you is actually worth the value that you're paying. So if I'm lending you $500,000 and I go and I see the house and it's falling apart, and in reality the house should actually be $300,000, $200,000, they're not going to loan you that amount. And again, this is where you having an agent, we can explain this to you. We run analysis actually before we make an offer, just to make sure that whoever the listing agent is, they did their homework, they listed the price correctly. But this is why you want to make sure you understand the difference. One is optional, one is not. Even though the regular inspection is optional, I recommend it so much because I've seen it happen with people that buy new houses and they think, well, it would be perfect. There's nothing wrong with it. There's nothing that I should really be worried about. It's a new house. Even with those houses, they listen to me, they do an inspection, and they find out that there was things that they needed to get fixed because, again, they're built by humans just like you and me, so mistakes can happen. So it is better to really just make sure you're doing your due diligence. And the appraisal, those typically can run you anywhere between $600 to $800. It really just depends at the time that your bank is ordering it, so just keep that in mind. And also for the termite, they want to make sure that the house is free and clear of termites, which I know you would want to do the same thing. So just make sure you ask your inspector to do the add-on for the termite because they will require this before you close. Now, let's talk about the VA funding fee. So I'm going to go ahead and also put some examples here on the screen for you guys, but it's a one-time fee and it varies based on first-time use, the repeat use of the VA funding fee, and how much down payment you're actually allocating toward the down payment of the purchase price. So examples can be, let's say you have a 2.15 for a first time use of the VA funding fee. Meanwhile, some of them can actually be higher, some of them can actually be lower. So again, it really just depends on where you're at, which is why it's important for you to talk to your lender so they can tell you where your VA funding fee would actually be. Some veterans that have service connected with disability ratings, you actually may qualify for an exception on the VA funding fee. So again, if you talk to the lender, they can check to see if you're 100% disabled, see overall where you fall under that category so that you can take advantage of all of the benefits that are there for you. Now, the next thing, and this is like the last things that I want to go over when you're using your VA funding fee, is make sure that it's actually the right time for you. I've seen it time and time again where there's people on the internet telling people you shouldn't buy a house, you want to think about maintenance, you want to think about repairs, you want to think about insurance, long-term investment, overall taxes. And yes, that is all 100% true. It's 100% valid. But I also know people that tell me, I don't care about those things. I want to have my very own home. I want to be able to leave something for my family in the event that I pass away. I want to be able to actually create a sort of vehicle that my family can actually use for wealth, because after I finish paying it off, maybe they rent it and that's going to be generating another $2,000 for the rest of their life. So here's what I will say, and this is why, again, it's important to work with agents that actually care and are going to explain to you the pros and the cons. Is there possibilities where you can actually rent a house for a lot less than actually buying a home? Yes, 1,000%. Now, is that what you really want? That's up to you, right? I have people that also tell me, like, I hate living in apartments, Alexa, because I'm sharing my space with everybody else. Like, I just want my own space. And by the time that they look at residential rentals, they're like, well, the residential rental is almost the same price as a mortgage. Why not just buy my own house? So again, take this with a grain of salt, but overall, just make sure it's the right time for you. You see, I've mentioned this before, but I'm an investor, so I do buy houses, I flip them, I have my own Airbnb. And I say this always to you guys because I came from nothing. So everything that I have, and I am not saying this from a place of, oh, look at where I'm at, because I'm nowhere near where I want to be. I am very blessed and I'm very thankful with God for giving me the opportunities because of where I've come from, being able to build what I have. I'm eternally grateful for real estate because it's helped me use it as a vehicle. But this is not the strategy for everybody. You know, when I started getting into crypto investing, some people were calling me crazy. I didn't care because you know what? It's not their money. It's my money. When I started investing in the stock market, some people called me crazy. I didn't care because it's my money. And that's the same mindset that you want to have. Make sure that you're getting in alignment with people that actually know more than you, that are going to guide you, that are going to be ethical, and that are just going to give you the pros and the cons, because ultimately, this is the life-changing decision for you. If you're thinking about buying, if you're thinking about selling in El Paso, feel free to click on the links down below. All of my information is there, and whether you're looking at using your VA loan in another state, I do have agents throughout the United States, so let me know. We'd love the opportunity to connect you with one of them. But regardless, I hope this information was helpful, and if you did find any value in this video, I would appreciate you leaving us a comment, maybe letting us know what you would like to watch next, subscribe, and give it a like. So with that, thank you so much for hanging out with me, and I will see you on the next one.